Are you a military hero looking to achieve your American dream of home ownership? Let us guide you through the benefits and process of VA loans, featuring no down payment required, no mortgage insurance needed, government-backed guarantee. Plus, learn about even more advantages that makes VA loan a game changer for military home buyers like you. Watch how to get started on your path to home ownership. I'm Mikhailo Burtovey, your licensed real estate expert here in Miami, and our VA mortgage specialist, certified and licensed specialist Emmanuel will explain you everything in details. Watch the video. Let's get started.
All right. So just to summarize the benefits, once again, benefits for the veteran. There's 0 down payment up to county limit. Okay. No maximum loan amount. Once again, we strike that down. No mortgage insurance, saves them on the monthly payments, and no additional time to process or underwrite the VA loans. Typically, you could close in as little as 20 days on a VA loan. So we are a broker. We are able to shop over 40 different lenders, and we actually make sure that you get the best pricing, the best rates, all of those terms. And this is gonna get you guys lower rates, lower closing costs, quicker closing times. So all of that for you guys. Hi, I'm Emmanuel Blakemore. Today we'll be talking about VA loans, the benefits of VA loans, and why veterans should use this benefit to better their home buying experience. In 1944, the VA program was put in place by Franklin D. Roosevelt through the GI Bill. Okay, this was to stimulate the housing economy. This was after World War II. This was one of the things that helped benefit our veterans that have served, as well as stimulate the economy, housing industry, and provide assistance to veterans and their families, which is also a lot of people were impacted from their family members being at war, so they also needed help with these VA benefits. People that spouses have been deceased and so on and so forth. All right. So at that time, the maximum loan amount was $2,000, and 50% of that was guaranteed by the government. So $2,000, think about that. What are you gonna buy with $2,000 now? Nothing. Can't buy a gumball with $2,000 now anymore. And they were actually guaranteeing 50% of that 2,000. So the other 1,000 was not guaranteed. But you can imagine that since 1944, this program has changed a ton. The way it's run changed a ton. It's got a lot simpler and a lot more beneficial for our veterans. Okay, so don't just think that that's how it is anymore. So going into myth 1, all right? The VA home loan takes way too long and the appraisals are always low. How many have you heard that VA appraisals come in low? There is always a problem with a VA appraisal. They take longer to close than a conventional loan, stuff like that, similar to the FHA, right? That's just not true, okay? So we take everything from application to funding. We work with our partners hand in hand to make sure that everything is seamless. Average time to appraise for these VA loans is 7 days. Okay, that's pretty average for an FHA loan, a USD loan, a USDA loan, or any Govy loans. Okay, that's nothing, too concerning, right? I think where people get caught up is there is a certificate of value. Okay, so when we get that appraisal, we have to send it to the VA and make sure that they approve of that price, okay? That takes about 2 days, not very long, but that does add on to your 7-day turnover period. So that's where people are like, oh, it's gonna take forever. We gotta send it to the VA. Now I gotta wait another week. Now we're not gonna close on time. That's not true. That's just not true, okay? It takes a total of 9 days, but that's typical with most appraisals. Conventional appraisals turn around a little bit quicker, but that's not always true. Sometimes they also take 7 days, okay? And then the other myth of these appraisers are gonna give me a lower value because they're VA appraisers. They're looking at every little thing to make sure that the value comes in low and the VA doesn't have to shell out more money. So actually, only 1% of VA appraisal actually come under offer price. So it's very unlikely that you're gonna have a VA appraisal come in lower than you expect, and very much more likely that you're actually gonna get the value that you want back, even more than some of the other loan products, all right? Now, subject property must meet minimum property requirements. That's something that a lot of people are caught up on, right? There's certain things that have to not be seen in the loan, in the appraisal, for the loan to be guaranteed by the VA and ultimately to be originated, okay? So, but what does that mean? It's very simple stuff. It's the same stuff that you would go through if you were looking at an FHA appraisal, okay? So what you're gonna be looking at, you're gonna make sure it's livable, it's sanitary. We don't want holes in the walls. We don't want holes in the floors, the tripping hazard, no loose wires, okay? You need to be able to have a bathroom. You need to have a kitchen in there, okay, in that living space. They need to have running water in that living space. And when we're talking about kitchen, you have to be able to make food in there. So I don't care if it's a hot plate plugged in, you gotta have a hot plate, a mini fridge in there, and you have to have running water, okay? The things that you need to do to use a kitchen, right? Does that make sense?
Yep.
All right, so that's pretty much what that means. They're not, worried about little things. And a lot of the time the VA will actually waive these things once they see it on their appraisal. As long as it's not super hazardous, we can actually get it waived by the VA, and then we don't even have to worry about it. But that's not a huge thing to be concerned about on a real estate agent's end, because when you show us the property, when you get the inspection back, when we see the inspection, we're gonna be looking for this stuff prior to appraisal, okay? Now, this will affect properties being sold as is, of course, because if you do an as is property and there are things that need to be fixed in order for the VA to guarantee, we're gonna have to get that fixed prior to closing. It may have to come out of your client's pockets, and VAs, they don't typically like coming out of pocket for VA loans because they have zero down payment, and that's what they're using the loan for, to keep money in their pockets. So it may have an issue if we go as is, but that's always a case by case thing, okay? Like I said, you can usually get them the inspection clear, or the inspected and clear inspection report issued prior to guarantee. All right. Now, all VA loan purchases require a clear termite report if it's in a termite zone. That's a big one because Florida is in a termite zone.
Yeah.
Where the whole state's a termite zone. So we do need to make sure that the report comes back clean. But the great thing about us in Miami is we deal with a lot of condos, right? And guess what? We don't have to worry about with condos. Termites. So that's a great thing for us. We don't have to worry about termite inspections on those, unless of course the appraiser comments that, hey, I see termites, let's check this, which then we should have known that prior to, right? Because we of course are gonna stay ahead of that, okay? And like I said, you're gonna have to repair any items or deficiencies that were noted on the appraisal report, because we need that loan to be guaranteed by the VA, and it has to meet MPR. All right, so everybody got myth number 1 down? All right, perfect. Now let's go to myth number 2. The maximum VA home loan amount is too low for my market, right? We're in Miami, we're selling big stuff, right? Big loan amounts, Broward, big loan amounts. My VA buyer is not gonna qualify. We're gonna have to go a conventional route, right? This is too expensive. Well, this is just not true. This is just simply misinformation, okay? So what is the maximum loan amount for the VA loan in Miami right now? So this is the way it works, okay? So there is no maximum loan amount, but they do have standard county limits, okay? So the way it works, okay, is you'll have your sales price. So this is just a quick example, sale price of about $584,350, and the county limit, like I said, is $484,000, right? So you take the difference of that. Now, that county limit, VA is taken care of. That difference is what the client is gonna have to pay a down payment on, okay? So, well, the difference is $100,000, okay? So we have to put 25% down payment on that $100,000, which comes out to about $25,000. That is what their down payment is. They're not putting a down payment on the full $584. Does that make sense? Okay, cool. Now, what you do is you take your sales price, you subtract that from your down payment, and that gives you the actual VA loan amount that they'll give, and that's actually with only less than 5% down. So typically VAs don't have to put any down payment, but if you go over the county limits, they do have to put a down payment on the difference, okay? Which is still less than 5% down, which is, less than on a conventional loan. So it's a great way to go about it. And in this situation right here, if they were to put down another about $2,700 and get to that 95% LTV, their funding fee gets reduced from 2.15% to 1.5%. So that actually saves them another $5,000, right? Because the funding fee is gonna get wrapped into their loan amount. So this is a great way to show clients, hey, let's use your VA loan. I understand that you're worried about certain limits, but the sky is the limit, all right? And it's gonna be less down payment because we only have to put down payment on the back half of your loan. Okay, gotta get a pre-approval. He has to talk to a mortgage advisor. He has to talk to me. Exactly, and we wanna see his certificate of eligibility, okay? So that certificate of eligibility is gonna tell me what his entitlement is. And if he has full entitlement, sky's the limit. Exactly, it'll give me what branch they're in and how much their entitlement is. If they are disabled or considered disabled by the VA, that also is a benefit to them because they don't have to pay a funding fee. So that will also be on their COE. Okay, so, and it's very simple for a VA to get it. They literally go to the website and they'll fill out a simple form and then they'll email them the form, and it's, you know, like a day. Okay, so myth number 3. The VA home loan will cost my seller too much in closing costs. That's one of the big things when we're talking listing agent seeing an offer come in VA. One of the things is, hey, I'm not too sure about these loans. It doesn't sound something I'm familiar with. Let's put it to the side. The other is the seller is gonna have to pay all these different costs because the VA is not allowed to pay it. These, you know, all these different things that people say that the seller has to pay is just simply not true, okay? So what are unallowable fees? There are no unallowable fees or loan fees, okay? Any loan fees above 1% are considered an overcharge and can be paid by rate credit or negotiated with the seller. But up to 1%, you don't have to worry about they're allowed to pay, okay? And we don't charge an origination fee, so we don't have to worry about that 1% coming from us, right? So those third-party fees can be covered, okay? Or we can issue a rate credit, or it can be negotiated to be paid by the seller if so chose, but there's different ways to get around this. It's not always gonna fall on your seller, okay? Now, what about pest inspections? The veterans can't pay that. Wrong. The veterans can pay for pest inspections, those termite inspections, and in some states, it is even part of the 1% maximum that they can pay. So anybody that's saying, hey, this is gonna cost my seller more out of pocket than if I took a conventional loan or I took an FHA loan, it's just simply not true, right? They just don't understand how the loan is done. And typically, you know, they're a realtor, not a lender. So even some lenders don't even know this stuff. You just gotta get a guy that's a VA loan specialist, all right? And I got you guys. All right, so to overcome the seller's objections with dealing with VA buyers, what Action Mortgage does is we allow them to pay all the non-allowable fees. So borrower could pay all fees up to 1% if origination fee isn't charged, which we do not. So that allows them to cover a lot of those sellers' fees. Okay, so we're talking lender fees, escrow fees, termite inspection, notary fees, all these third-party loan-related fees and such, all right? And that way all parties benefit. Generally cost the borrower less than 1% because now, you know, it's a VA loan. They're very cheap. There's very little closing costs. Typically, we are gonna be below 1%, even if we did lump all that stuff in. So we don't have to worry about that rate credit or any of those other things that we were addressing, but we can use those if need be, all right? In the back pocket. All right, now let's go to myth number 4. The VA funding fee is too high. Isn't that doing a disservice to my veteran? So you're thinking, hey, I have a loan, he doesn't have to put a down payment, but this guy has to come to the table with 2.15% and it doesn't even come in the form of equity. That's expensive, right? Like, why would I do that? Like, you might as well put the 3% down and get a conventional loan, right? That's what you're thinking, and get it in the form of equity. But this is what we have to understand. The conventional loan has mortgage insurance. The VA loan has no mortgage insurance. It has a funding fee. So the funding fee actually covers the mortgage insurance for the term of the loan. And it actually becomes cheaper than if they were to get mortgage insurance, or God forbid they have an FHA loan and they're paying mortgage insurance and MIP, okay? And let's, dig a little bit into that. So like I said, the funding fee is a one-time fee when they originate the loan. Instead of monthly mortgage insurance that they're gonna have to keep paying, it's just a one-time 2.15%, or if they put 5% down, 1.5%. If they are using multiple VA loans, then it goes to, I think the highest is about 3.3%. And we'll get into how people use multiple VA loans in a minute here, but those all are gonna be cheaper than mortgage insurance in the end. So just a quick example here, if the loan is about $484,000, just $10,413. When the finance into the loan and amortize over 30 years, it comes out to $49 a month, which is a lot cheaper than anyone's mortgage insurance quotes. Okay, and just to give you some numbers on that, and you don't have to take my word for it, let's go through a quick example. Okay, so this is the effect of the funding fee versus an FHA and a conventional or Fannie Mae back loan. Okay, so everyone knows VA, no down payment, right? Great. So that's already saving the money. Now this is where the line where you're gonna be like, okay, this is kind of making sense, right? Funding fee, $10,000. You also have to pay MIP with FHA. That's an upfront mortgage insurance premium, which is gonna have to either get financed in the loan like a funding fee, or it's gonna have to be paid at closing like a funding fee, okay? So that's already kind of apples to apples here, except you have to keep in mind with the FHA, they're paying a down payment. So it's really not apples to apples, just to start, okay? Now, loan amount is gonna change depending on down payment. We're funding 100% of the loan amount, but here's where I want you to look. The monthly MI, okay? So we talked about the funding fee being about $45 a month on our last example, right? Here, you can see FHA MI is $331 a month. How many of those monthly funding fee can we fit in $331 a month? Okay, conventional, $250 a month. Once again, these are things that you have to illustrate and tell your clients, because when they're deciding which loan product to go to, they're not looking at MI really. They're looking at what's my monthly payment, right? But we have to structure and tailor that monthly payment for them, okay? So that goes to show that their principal, interest, and mortgage insurance actually end up being cheaper here with the financed funding fee in the loan. Cheaper, way cheaper than any other loan here, okay? And if we take it over the 7-year cost projection, because typically when you're taking out a mortgage, the loan typically is either refinanced, home is sold, someone else buys it within 7 years of owning that property. So that's typically where we run our numbers, between 7 and 9 years. No one's actually staying in a property for 30 years. I mean, not anymore at least. And you can see just how much cheaper that 7-year cost projection is for the VA loan than it is with the FHA and the conventional loan. Okay, so you're actually saving the money. Don't worry about that funding fee. I understand that it does look a little bit like, oh, he's paying an extra 2.15%, but no, he's not paying extra, or she's not paying extra anything. This is just something to help make sure that mortgage is insured. Okay, and every lender is gonna want their mortgage insured, especially if you're putting 0 down payment. Right, makes sense. And last year alone, veterans saved over $2 billion in mortgage insurance payments. Okay, so we want to get that number higher. We want our veterans to pay at least out of pocket as possible. All right, now myth number 5. Does anybody have a question about that? Okay, cool. So let's go to myth number 5. My veteran can't get another VA home loan because they've already used it or lost their entitlement in a foreclosure. That's another big one, right? Can my VA loan be used again? I can only use my VA loan once. I want to make sure that this is my forever home before I use my VA loan, yada, yada, yada. Okay, let's get into it. Veterans can use their entitlement more than once. They can use it multiple times, they can use it 3 times, they can use it 4 times. Once again, it comes down to entitlement, which we were just speaking about. And if they haven't used their full entitlement, then they of course can buy another property, move up, purchase a second home with their leftover entitlement. And the way it would work is they'd use the rest of their entitlement for a certain loan amount, and then the rest would be in a down payment form that I showed you earlier, where they pay down payment based off the difference. Okay, now they can use more than one loan at a time, and if they've experienced a foreclosure, they may still have some entitlement available. But that's something that they need to sit down with the experienced mortgage advisor, a VA loan specialist, and talk about This isn't something like, hey, I had a foreclosure, I can't qualify. No, sit down with my mortgage advisor, talk about it, and you still may qualify. You don't know until you know, all right? All right. So just a quick recap to summarize for you guys, right? These are the 5 biggest myths that we see with VA loans, okay? 1, VAs take too long to get their appraisal and they come in low. Smash that. Maximum loan amount is too low for my market. Not even a thing anymore. VA loans are expensive for the seller. Why would you even say that? And then the VA funding fee is too high. Come on now. And the VA, if the veterans use VA loans or lost entitlement cannot get another home, just completely not true. A lot of stuff, a lot of misinformation being passed around. We need to clarify that. We need to be the voice of reason to our clients, and we need to be the educator to our clients. So this is stuff that they may come to you with, and you got to shoot that down. Okay, you have to make sure that they know exactly what they're going to see going forward with their VA loan without having any misconceptions. All right, so this is a quick blurb, just understanding the benefits of a VA loan versus another conventional or an FHA or USDA loan, okay? So biggest thing, no down payment required as long as it's within county limits, and we went over why, right? So that's a great loan. You don't have to worry about bringing assets to the table for down payment. Huge win for the client, huge win for the client. No monthly mortgage insurance. We went over how that benefits, right? We went over the numbers on that. Excuse me. Seller contributions allowed up to 4% of the value and above and beyond payment of standard and closing fees. Above and beyond payment of standard closing fees. So that means they can have their closing costs paid for, right? That also means that, you know, they don't put a down payment. So they could get more money towards equity. That means that they can also get money to repair something in the house. 4% can be used for so much. Like I said, it's usually below 1% in closing. So this is a huge win for the client. And typically on conventional loans, you're only allowed 3% seller contribution. So they're allowed 4%, and 4% is not even the limit. If it's considered, you know, standard and not, you know, overdoing it, then we can even go 4, 5, 6%. The sky's the limit for VA loans once again. All right, 100% of gift funds are allowed, and then that does not necessarily have to be from a blood relative. So they don't even have to have assets to come to the table with. If they have a friend or a spouse or a blood, it is a blood relative, they can give them the money to close and purchase the house, and they just have to give them the VA loan benefit. Okay, and like I said, the closing costs are cheap. So why wouldn't you use your VA loan? Just saying, you know, that's not allowed in convention. So no minimum cash reserve requirements, only what's necessary to close on the loan. And then we just covered 100% of that could be gift funds. Come on, doesn't get much easier than that. Like, you don't have to have any cash reserves. It's just not typical for any loan to not have a need for reserves, because if something happens, who's gonna, you know, foot the bill? Well, the VA is. That's a great thing. So, like I said, veterans can use their entitlement multiple times as long as they don't use it all up. Veterans qualify for home loan benefits after 2 years of service in most cases, but that is case by case. In the major 4 branches, it is typically 2 years. We're talking Army, Navy, Air Force, Marines. They typically only take 2 years. If they're in like, what's the home one? You know, National Guard, yeah, it's a little bit different. Stuff like that is a little bit different, but typically 2 years, okay? And this is a huge one right here. Assistant counseling available to veterans in default due to temporary financial difficulties. No FHA or conventional loan provides that, and VA saves more than 70% of defaults from losing their home. 70% of defaults from losing their home. That is the biggest thing about, I like, all this is great. That's a huge thing when we're talking about passing a benefit to our client. We want that certainty that this is a safe loan, this is a safe, you know, future endeavor, this is gonna be something that they can use forever. And a lot of people are defaulting on homes right now in conventional and FHA because insurance is going up, taxes is going up, all these different things that they have no control over. And having that extra assistance there to help you if things, do go sideways, which we hope they don't, but sometimes they definitely do, is just huge. And you don't have to pay anything for that, okay? So now how do we identify these buyers, and how do we get these to generate some more liquidity for us, right? So VA financing is on the rise, but it's very underutilized, which I've been saying and repeating, okay? Because only an estimated 9% of US veterans and qualified military personnel have used their loan benefits, okay? 9%. So that gives us 91% of VAs that have just sitting there. And we just covered, they don't have to bring down payment, they don't have to have any cash reserves, and they can pay closing costs in 100% gift funds. And only 9% have used it. I think that's something that we need to take advantage of, because hey, there's no easier loan to get done than the VA loan, okay? And it's a benefit to them. It's a benefit that they should take advantage of, along with the other benefits that they've earned from their service in the military, okay? And in most cases, the veteran will qualify for higher purchase price than with other financing types. That's for multiple reasons. The funding fee lowers monthly payments with DTI. Also with that, you're getting a lower interest rate, lower than market interest rate. VA loans, the VA loan benefit allows them to get a lower than market interest rate. So typically your par rate for what a conventional loan would be is going to be, somewhere between 0.1 to half a point higher than where you would be if you got a VA loan at par. Okay. So you save them money on both fronts there. They qualify for more is the outcome. Okay. So that's one thing that I definitely stress when you want to talk to clients is, hey, I know you want to go conventional or you want to go this way, but hey, let's just see the numbers on a conventional. Let's see the loans on if you use your VA benefit, and let's compare apples to apples to make sure that this is something that is beneficial to you going forward. Okay? They have to qualify for their COE, their certificate of eligibility, and typically it takes 2 years to qualify for those benefits. Like I said, but there are cases where that's not true, such as if they were honorably discharged, they got injured over there within their first year or something like that, and they had to leave early, then typically they'll have their VA benefits still given to them. Okay. But yeah, strike up a conversation with these guys. They love talking about their experiences, what's happened over there, the things that, I've heard the craziest stories, man. I've heard the craziest stories from guys that were gunners on big planes over there in Vietnam and Korea and all these different stories. So it's just fun to talk about, and it's good conversation to help them use their benefits that they have been given and they have earned. Okay. And remember, many of our veterans are women, and they're not being approached about these things, right? It's like you have to make sure that you're speaking to everybody and pick a niche, right? Pick a niche of client, right? If it's, veterans that have transitioned into working in schools, let's talk about your VA loan benefits. If it's, veteran, women or veterans that have just left the military, or, pick a niche. There's 91% of benefits out there that's not being used, and they don't even have to be in the 4 branches, right? They just have to be in the military. So there's so many different people that qualify for VA loans that aren't being touched or aren't being marketed to. Oops. Yeah, so usually it's gonna be anybody that's covered under the VA umbrella. So like, I think Homeland Security is under there, right? Like Border Patrol, I think. Even if they're not boots on the ground, they're gonna have a 2-year waiting period before their benefits set in. Okay, all right. So just to summarize, the benefits, once again, benefits for the veteran, there's 0 down payment up to county limit, okay? No maximum loan amount. Once again, we strike that down. No mortgage insurance, saves them on the monthly payments, and no additional time to process or underwrite the VA loans. Typically, you could close in as little as 20 days on a VA loan. An FHA loan can take 30 days, conventional loan can take 30 days. So the idea that veteran loans take longer is just not true, okay? It just requires a good relationship between your lender and the VA. Now, advantage to seller, substantial depending on upon the lender, right? As far as closing costs, no excess cost to seller if calculated properly, and they can compete with cash offers in both time to close and return to the seller as far as making sure that they're hitting their numbers when they want to get a certain net from what their closing costs are going to be, and as well as speed to close. Hey, I got to move now. I got a house that I'm about to move to. My lease is about to start at this new place. My mortgage is about to, whatever. They have a time limit usually, right? So this is something that allows them to say, hey, I don't have to wait for that cash offer because I want to close in 15 or 20 days. Hey, why don't we just accept this VA loan offer that we have?